Hello, and welcome to the Wade Borth podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. We get into page 21, where Nelson was talking about creating your own banking system through whole life insurance, dividend paying whole life insurance. So let me just state that again. He says what he had in the previous chapter was, here's how banks make money. This is what banks. He gave a couple examples, a couple ideas, pitfalls and traps of how they didn't work. But overall, the traditional banking thought process still works. Banking still works, right? As long as they don't abuse it. And I think there's a lot of room for that, but it still works. The question is, who's in control? That comes back down to do we want to use Wells Fargo or would you rather use your own financing system? Yeah. But that's probably a topic for a later date. But in this chapter, he goes into creating your own system through dividend-paying whole life insurance. And so we have to ask the question, why is he saying this? What was the reason behind that? First off, we have to, again, changing our paradigm of we should use private lending instead of somebody else. And why would you think that would be the case, Nicole?
When I think about using private lending instead of using a bank, it's just I frankly like the idea of keeping the transactions that I'm doing to myself and having more control over that.
100% control. What does control lead to? Doesn't control lead to freedom?
Yeah, I was going to say self-sufficiency, but yes.
Freedom, right? Again, freedom isn't always easy either, is it? There's a lot of responsibility with freedom. I've had conversations with a friend of mine, Mary Jo, has a comment saying that being debt-free isn't as great as it sounds because a bum on the street can also be debt-free. It has nothing.
Yeah,
so there is something to be said. Freedom there's a lot of responsibility. The more freedom you want, the more responsibility you have to take on. And quite honestly, not everybody is willing to take on that kind of responsibility.
It sounds great, but then when it's put into action, sometimes it's harder than what people are willing to deal with.
Yeah, especially at least initially, because it's a startup of anything that's always a little bit more difficult, right?
Yeah.
Because you have to learn, you have to educate yourself, you have to get a process. But once you have that, then it becomes easier. And I think that's where people see this big hill and they don't see beyond the hill. They don't see all the fruitful plains beyond the hill. They see the hill they have to climb and go, I'd rather stay in bondage. Mm-hmm. And then they just stay there. They don't want to press on over that hill because it looks like a lot of work. But once they get over that hill, then what they start discovering is that, freedom's got some work and responsibilities, but it also gives you freedom of time, freedom of money to do the things you want to do. Your freedom of relationship. So we have a finite amount of time on this earth, and if we could a way to free up time that we're spending feeding somebody else's financing system like Wells Fargo, and we can use that to spend it with our family, wouldn't that be fabulous? And then becomes freedom of purpose, and we can start serving that greater purpose than us.
Yeah, I jumped ahead in my mind with this because I was thinking, if you're creating your own banking system, and so we're talking about freedom and spending more time with your family, and if you have your own banking system and you are able to help your own family members, why wouldn't you want to do that as opposed to, so you always say love yourself and love your family more than you love Wells Fargo. Why wouldn't you want to do that?
I can think some reasons.
Yeah, I'm sure there are reasons. But I'm thinking, if you're going to pay interest on a loan, why wouldn't you want to pay it back to a family member who you love and give them the benefit of making that money instead of giving it to the bank who they're not going to put that back in your own family financing function. They're going to put it in their own.
It's like owning your own grocery store like Nelson talked about. If you owned your own grocery store, why would you go to Kroger's to buy your groceries?
Yeah.
And actually that leads into, I have an interesting story where I had a client who had a landscaping business. And this landscaping business was, again, in today's world, I'm like, how's this landscaping business failing? Because it was failing. And so the client and I had a long conversation because he had taken on a policy 4 or 5 years before that. And we had a great relationship. And it came down, and this is rather interesting. I said, so what are you doing? What's your business doing? And he was explaining it. And I said, are you keeping busy all the time? He goes, I'm busier than I've ever been. I'm like, you're busy. You have contracts. Why are you failing? So I started asking him, tell me about your customers, how you're pricing it. And I typically don't get that deep, but it seemed like there was something there I had to dig into. Come to find out, he was doing a project for his father-in-law. He was doing a project for his brother. He was doing a project for his cousin, all at cost. And I said, wow. I said, right there's your problem. He was doing 4 or 5 projects where he wasn't making any money. Quite frankly, I think he was losing money. He wasn't even breaking even. And I go, why are you doing that? He said, well, they're my family. I love my family. I want to do for them. I said, if they understood your business, if they loved you as much as you love them, they would say, don't give me a deal. I'll actually pay you more than what you would charge a normal customer. But we have this Walmart mentality. We want everything for nothing, and we don't see what the consequences are. And so it was a hard discussion. I said, you need to go back to your family members and let them know that they're driving you out of business. You need to price every project you do so you make money, because if you don't make money, you're not going to be around. This is maybe the reason why you see so many family businesses that fail, is that they don't understand that in order to succeed, my family, I need to charge my family or myself as much or more than I'm charging everybody else, so I can create more inventory of whatever it is I'm doing.
Yeah. And again, just thinking about this, I had a conversation with a couple of people a couple of days ago, and this is one of the hardest things that it was for me to wrap my head around, is this idea that if you have this system set up and you are borrowing your own money, why would you pay interest? And you and I have talked about this many times. I have to continually come back to this and go, okay, what does this look like in a business world? Not how does it feel, but what does it look like? And what I explained, because this lady she had that same question. What I explained to her was, the life insurance policy with the company, so the company has actually set up the banking system for you. You've got the life insurance policy, which is your little micro system, but the insurance company is the force behind that. You want them to be profitable. You want them to be profitable, because if they're not profitable, then your little micro system that sits inside of this isn't going to work.
Yep. And you know what I think the first step is for everybody to get what we're talking about, and this lady, in particular that you're just talking about? They have to come to grips with the idea that you finance everything you do. So let me say that one more time, just so everybody can hear this. You finance everything you do. Either you pay interest, or like my buddy Don Blanton would say, or you give up interest, right?
Yeah. But here we go back in today's world, we go back to this conversation. I think we talked about this in our last podcast, that we have devalued money because the interest rate is so low. And so in today's world, people look at that and say, well, it's not costing me anything to finance. So far from the truth.
Yeah, it costs you a bunch. And again, it's a simple example. And this goes back to, in this chapter especially, Nelson references a 1993 Fortune magazine article where a guy was talking about EVA, economic value added. And I can tell you, I had to read that about 10. I actually went and found the article and read the article just because I'm like, what's EVA? What's economic value added? And of course, it's some egghead has to put a fancy title on it, so it seems like he's important. But basically, it comes down to, when you put your money to work, if you put your money on the street, you better make sure that it's getting paid back at a reasonable rate. Mm-hmm. That's really all it is. And companies didn't understand this or didn't do this. And so their subsidiaries, and I think the article goes on to talk about one of the best examples was Coca-Cola opened up a bunch of bottling companies all over the United States. And they, because they had cash on hand, they had a ton of cash on hand, which in my world, cash on hand is like a huge, valuable asset. And when you put it to work, it should be earning a certain amount of interest in order I'm putting to work, because it's one of the most valuable assets I have. But Coca-Cola had a ton of money in hand, cash in hand, so they opened up all these bottling plants. And all these bottling plants, great profits, were profitable. And they go, and so everybody, the guys that are running the bottling plants are like patting themselves on the back, thinking, man, this is a great business model. We should do this twice as much, until some accountant goes, wait a second, we're not charging these bottling plants a proper amount of interest. Because if we were to take that money and go invest it somewhere else, we could have earned 8% interest. The instant that they applied that interest that they could have earned somewhere else to their own bottling plants, half those bottling plants closed, because now they weren't profitable, because they weren't taking into account all the expenses.
Yeah. And I was just going to say, when we devalue the money in today's interest rate world and say, oh, I'm not really losing anything because I'm not gaining any interest, we're focused on the interest that you would get from the bank, as opposed to what else is out there in the world.
Yeah, exactly. It goes back to the previous chapter, previous two, but the problem is that we're focused on the wrong thing, right? Yeah. We're saying my investment, which is a small sliver of what we have, I'm not getting any interest on that, versus the amount of financing charges and financing of everything else we do. So again, we're focused on the small thing, which is the savings account versus the amount of the 35% of our income that we spend on financing and financing charges. That's the part where Nelson hit the nail on the head. We're focusing on the wrong thing. And then the other side of the equation is, yeah, if you have your money in the bank and it's always going to sit there at 1% or 0.5%, it doesn't have a lot of value. So you need to find a way to put your money to work at a more valuable pace, right? Can you buy real estate? Can you buy other assets to provide you cash flow? We can go back to Robert Kiyosaki, right? Buying an asset that will give you the cash flow you need to buy your other item. And if you do that and you understand how valuable cash is, then you would never, ever buy something or finance something in your life and not have a thought process about paying it back with interest. Because the thing that Nelson was trying to get to, but I don't know that he did, was he was trying to get people to understand that you have to think like a business and stop thinking like a consumer, because we've been so conditioned to think like consumers, and that's where those thought processes come in. People of money and wealth and businesses completely understand this now. This is a natural, self-evident thing, is that, oh yeah, if I use money in my business, I got to make sure we charge interest for it. That wasn't always the case. That took somebody to sit down and write articles and papers about it to get it to be a revelation. Now it's self-evident, right? But we have to get consumers to think the same way as businesses. Mm-hmm. Because if you don't, you're always going to be captive of those businesses.
Yeah. Back to the very beginning of this and the topic that business or banking is one of the oldest businesses in the world.
Yeah. It's one of the old businesses in the world. It's been around for a long time because it always makes money.
Yeah.
I had an accountant tell me one time when I first started introducing this idea to different people. He goes, yeah, that makes sense. He says, those that control the financing always win. What do you mean? He says, the bank lends money, the business probably will fail because businesses fail more than they succeed in this world. And he says, but the bank always makes money. They always come out with an asset of some sort, either partial repayment or they foreclose or whatever they get. They typically always make money. So if they didn't, they'd be out of business, right?
Yeah.
So think about that. So whoever controls the financing always wins. And it starts with the idea that we have to understand that we do finance everything we do. If you understand that, then you're either paying interest or you're giving up interest. And so if I'm giving up interest, whatever I'm investing in should at least make up what I could have earned somewhere else. And that's where it really starts getting people to understand, if what's going on, you'll know what to do. If you know what's happening.
I was just going to say that, because that is something that I have highlighted here. And I think Nelson does a great job of just boiling that down to a very simple concept. If what's really happening, you'll know what to do.
And part of our job in what Nelson's book was trying to explain to us is what's happening, what's going on. My job isn't to sell anybody anything. It's really to get them to understand what's happening. Mm-hmm. And then once they understand what's happening, they're going to want a solution. And when they want a solution, we can show them the process. And then ultimately, the best product to be used in that process is a properly structured life insurance policy to fund that. And now, why do I say that? We hear ourselves saying that, well, we got to use a properly structured life insurance policy. Why do we use a policy? I look at who in the banking business. Let's go back to the banking world. What does Wells Fargo do with their money? What does Bank of America do with their money? What does Chase do with their money? Where are they storing their liquid, accessible cash?
A lot of it's being stored in life insurance policies.
Yeah. It's called BOLI, Bank-Owned Life Insurance. I'll give you the website, and I've said this before, go to fdic.gov, and you can go in and see what Tier 1 capital, how much Wells Fargo, all these other banks they report how much money they have in properly structured life insurance. It's called bank-owned life insurance. Last time I checked, in each quarter, they have to report it. And so each quarter, I think last time I checked, it was about, Wells Fargo had $20 billion. $20 billion. And that's just one bank, right? Chase had somewhere in the neighborhood of about $18 billion in properly structured life insurance. Now, you have to ask yourself, if we want to become rich, what do we want to do? Do we want habits of people that are poor, or do we want habits of people that are rich?
Yeah, we want to emulate people that are the way we want to be.
Again, I don't want to be Wells Fargo, but I look at it and say, why are they doing what they're doing? Mm-hmm. And so that's really the breakdown, because I know there's a consumer mindset like, oh, life insurance, and they have this negative connotation. That's because they don't understand what's going on. They've been conditioned to think that they need to put their money where? In Wells Fargo's pockets. And then Wells Fargo takes it and puts it to work in a lot of different areas, but they put a lot of it into life insurance.
Yeah. And
I'm like, well, that doesn't seem to make any sense. Again, going back to our original discussion, why not just cut out the middleman? Can't we just cut out Wells Fargo? Take some of the lessons that they've learned, that we've learned from them. The good, hopefully we'll take the good and we'll leave all the bad. And then we'll say, we'll create our own system. And that's really what Nelson was at. So this goes back to, why do we do that? And again, it starts with a long-term thought process. But why are we using a policy? And I had actually jotted down a couple of notes, and we've touched on them. But if we look at how we're using policies, and when we're putting money with our mutual insurance company, because that's really what we're ending up doing. And insurance, really at the basic core, what is an insurance policy? You've heard me say this before too. All insurance policy is just a contract that I own, not the insurance company. I own the contract. I control the contract. I put my money with the insurance company. It's ran for my benefit because, again, I'm only using a mutual insurance company. And they're putting money, they're investing money or putting money in a professionally managed bond and real estate portfolio, done at an institutional level. So think about how powerful, for my benefit. So how powerful is that? They're doing something at institutional level that you and I can't do as individuals. Professionally managed bond and real estate, not stock portfolio, but bond and real estate portfolio with some other side things going on, but that's the majority of it. That's done at our benefit by professionals. Yeah. And then because I own the contract, I'm the first one that has access to that pool of money, guaranteed.
Yeah, I've used that phrase many times, and I think there's so much more power behind that when you really think about, you've got a multi-million or billion-dollar company that is, they are paying people that are way smarter than I am to find investments, to find bonds, to find things that they can invest in so that their business stays profitable and going. And you just get to tap into that. You don't have to take the risk. You don't have to go find that stuff. You don't have to worry about it. You just get to tap into that.
Yeah, because it really
is incredible when you think about it.
It is, because if you think about a pool of money, the leasing companies, this is just a great example. I found this out years ago. Where do leasing companies get their money? Insurance companies. They go buy big blocks of insurance companies' money, and then they start leasing companies, because all leasing company is exchange of money. So they're doing exactly what we're trying to teach people to do here. I actually know a guy that does this. He uses the IBC concept to lease medical equipment to doctors, to small private. He was trying to get a bunch of doctors to understand and get this, but they wouldn't get it because they're smarter than everybody else. And I pick on the doctors, but that's how some doctors come across. And he's fine. If you don't want to do this, then let me buy your equipment and I'll lease it to you. And they go, okay, that's fine. He makes more money off of leasing that equipment than he'll ever make by having them as clients. Just because he understood how money works and he had access to a capital and he's leasing these money. So leasing company, in essence, he started his own leasing company. But that's all leasing is this banking concept we're talking about, right? Access to our pool of money. Again, we have with a contract with an insurance company because they have billions and billions of dollars. The largest financial institutions aren't banks in this country, are insurance companies. And so we have access to that pool of money whenever we want by contract, and then we can use it and we got to put it to work. But we got to put it to work smartly. We can't be silly about it either. So we can find our own ways into doing those things. But they do it and they hold money there because it's safe, it's got guarantees, and it's liquid. But that's the part I think a lot of people have a tough time getting over is, why do I want a policy? It's like, why wouldn't you want a policy? Again, you can put your money in CDs and cash and do the banking concept of the process of banking or financing. Let's call it financing again. To the process of financing through that. But again, this has to be a very long-term objective.
Yeah, and I think sometimes when people think about doing it through life insurance, their thoughts go to, is that the only way? Why would I have to buy a life insurance policy? Can't I do this some other way? Can't I just put the money in cash and do that in cash? And the answer is, you could, but now you're dependent on your own cash. You're not tapping into the power of a professionally managed bond portfolio at the institutional level. You're limited by your own cash. You don't tap into the power of a company that's already been created for that purpose to be profitable and to, I lost my
they have a business model already set up to be profitable and to return give you the things you need, which are the safety, guarantees, liquidity. And I've had clients ask me that same question. Do I need to use a policy? I said, no, you don't. You can do it out of a shoebox. You have a savings account. But are you going to have 100% of your money invested 100% of the time? The answer is probably no. If you're a prudent person, you will not have all your money invested all the time. And so where is that portion of your money sitting at? Again, capital has to sit somewhere. Why wouldn't you have it sitting in your own banking system? And then if you look at banks, they don't have 100% sitting in cash. Quite frankly, it's the opposite. They have a small percentage sitting in cash and the rest of it is on the sidelines, ready to be turned to cash or access, a cash-like asset if they need it. But most of the time they don't need it. So then where do they put it? They put it into BOLI, bank-owned life insurance. Corporations do this all the time. Walmart was great at it, right? It's not called BOLI because Walmart's not a bank, at least not yet. Maybe they are now, but for the most part, Walmart, they had policies on all kinds of people. And the thought process was they caught them because they're trying to take death benefit out on people. It wasn't because of the death benefit they were taking the policies out. It's because of what's called corporate-owned life insurance. Corporation-owned policies because they needed a place to store their cash until they wanted to put it to work. Can you get a better business model than Walmart? And you might love them, you might hate them. I don't know. It doesn't make any difference. But look at the process they go through. And again, why aren't we doing the same thing? I understand we have to question things boldly and have an understanding of it, but going in with a negative mindset is the worst thing you can do. I just say open your mind up and say start asking why versus why not, right? Start asking why is Walmart doing that instead of being jealous why they're doing it.
Yeah. Question of, well, can I do that in cash often comes back to the idea of, I don't want a life insurance policy. I don't want to pay for the life insurance policy. So then again, we're focusing on the wrong thing. If you think about the life insurance policy is just your capitalization, is your business. And you have to, no matter what sort of business you're starting, there has to be some capital. There's some buildup, some time to grow that business to get it to a point where it's profitable. While you may not want the life insurance for the life insurance aspect, if you're just using this as a financing system and not looking at it as a life insurance policy, why wouldn't you want to do that?
Yeah, and that's exactly what Nelson said in the book, right? He says, if you really look at the example in the chapter, he says, if you really look at what's going on, he says, our need for financing is much, much, much greater than our need for life insurance.
Yeah.
And so when we're doing it and we're designing these things, we're designing them really the opposite way, right? We say, what's the least amount of insurance we can get money here? And again, without violating the IRS rules that we can get money in there. So now it's safe, secure, liquid, and guaranteed. And now we have that system, the back end of our system's already there built for us. We just have to plug into it. And again, does it have to be 100% of your money? And against this thought concept of this consumer mindset that we have to fight here a little bit. Not that we have to fight it, the consumer has to fight it. Because if they don't want it, it's to their detriment that they don't understand and implement this. Well, there are other people that want to do this. And so we're working with people that get this and understand this and want to do this. It doesn't have to be all or nothing. So it's like Robert Kiyosaki said, you have two sides of the coin. When in all reality, you have a third side, which is something in the middle. It's not all or nothing, right? It's a portion of your asset should be in properly structured life insurance. And eventually, if you'll understand what's going on, you want all your money to reside in your banking system versus having it reside in Wells Fargo. Again, if you own a grocery store, why do you go to Kroger to buy your milk? You might go there initially because maybe you don't have milk on the shelves yet because you're taking a while to capitalize your grocery. But eventually, once you have milk on the shelves and you have all the staples that you need on the shelves, why would you go to Kroger versus going to your own grocery store?
Yeah. You go to your own grocery store and you pay retail price.
100%, right? Because that buys more inventory that you can sell to somebody else.
Yeah.
I think that's the end of this chapter. He talks about, it's a great segue into that, is that we will start by being our own customers, our own best customers. And it goes back to the co-generation idea, right? Is that once we have enough capacity that we can satisfy all our needs for financing, what if we go out and find somebody else that has a need for financing, we can support them?
Yeah.
This is where you start doing the hard money lending. This is where you start to do, your brother-in-law wants to, build a house and he can't get financing, so you go do it for him, or whatever the case might be.
That goes back to the infinite banking concept. And this is one of these things that in the beginning, I was thinking about this only for me and my family and what I could do in terms of controlling my own finances. Infinite is very powerful. There are an infinite number of ways that you could use this money, not just in your own financing system for your own needs, but to things help other people, help other business owners, help other family members. It's infinite. And so that it's fascinating to me because when you start opening your mind up to, this isn't about, I'm going to go buy a car and buy it with my policy and pay my policy back. That could be part of it. There's so much more there.
It goes back to, again, it's been a long time since I've been on a plane since COVID and all that fun stuff. But when you get on a plane, what do they talk about when the masks drop down? Put yours on first, right? You have to get your house in order. You have to be able to survive and thrive so you can help somebody else survive and thrive.
Yeah.
And I really believe this is the way that we can make this idea, this freedom, not just for ourselves, but our family. We can make this generational. Is that you start by teaching ourselves, using it in our own system. We're just in the process of my son looking at different vehicles. Well, he's going to finance that vehicle just so he understands how the financing system works in his life. And then hopefully when he needs to start a business or wants to start a business or whatever it might be, now he has a financing system that isn't dependent on somebody in New York saying yes or no to a loan that he wants to do. He still has to come and get a loan, but hopefully he has a much friendlier audience in his family banking system than somebody in New York.
Yeah.
And sometimes we have to tell people, that's kind of the hard part, right? That comes back with the responsibility of freedom. Sometimes we have to tell ourselves, I want to do this. Yeah. And then should we finance it?
And I think you and I have talked about this before, that back in whatever the old days are, were more locally owned, and you could go into a bank. A farmer in a rural community could go into a bank and they could get a loan based on their reputation. The banker knew the farmer, knew the banker, the community knew who they were. It was more localized. That is gone. It's just, that doesn't happen. And so now you can't just go get a loan on your reputation. You have to go get a loan based on your financials.
So ultimately, with that being said, who's in control of your business? Goes back to what the accountant told me.
Well,
who's in control of that business, right?
Or whoever you're going to for financing.
They all have the ultimate say if you can do something or can't do something.
Yeah.
So you have no control of your business. You have all the responsibility. If it goes broke or whatever it is, you're responsible, but who has the ultimate control?
Yeah. And if you want to buy more cows, or you want to build a new silo, or you want to plant a different crop, and they don't understand your business model or don't like it or it doesn't fit with what they want to do, they tell you no, and now you have to find some other way to do it or not do it at all.
So again, it goes back to that whole idea of being in control. And so this is where I think there's a real disconnect with people, because they're always, again, focusing on the wrong thing. They're looking at rate of return. And I'm like, it has really, at the end of the day, it has nothing to do with rate of return. It has nothing to do with anything but control and freedom. Because if I can give you the control that you want to do, to live your life the way you want, to finance what you want to do, that will give you the freedom. And then there's rate of return. Again, we're focusing on, well, am I going to make 3% or 3.25%? And we spend hours and countless hours and thousands of dollars researching this because we think we have some revelation. It has nothing to do with that. We're focusing on the wrong thing. We focus on the thing that can give us that control and that freedom that we want. So we're not beholden to somebody else or having somebody else being able to tell us what we can or can't do with our business. We have our own desires and where we want to go, and hopefully we're doing a good job of educating ourselves, and then we're the ones that can make that decision. And it takes the decision out of somebody else's hand and puts it in our hands.
And
again, some people don't want that. Some people don't want that because they don't want that ultimate responsibility. But you have the responsibility of a business anyhow. Why not have the control of that?
Yeah.
Unless you're looking for somebody to blame.
Yeah. And I was just going to say, that's back to this idea of freedom and responsibility. So now you've got the freedom to do what you want. There's a level of responsibility that comes along with that. I
agree. I got to share with you. I don't think I ever shared the story with you, because just your conversation about the bank reminded me of this. When I first got started in this journey, my journey about infinite banking, it was rather interesting. Because I looked what plat map is, and who owns the land.
Yep.
And so I was looking in this town that I was in, and who owns all the land? And I'm like, oh, it's the bank. The owner of the bank was on all this land. And this bank in this community was started back in probably 1920-ish, somewhere in that neck of the woods. So come to find out, so I started asking questions, and they said, oh yeah, Albert, who was the banker. He was the banker back in the day, and then in the 30s, he would lend people money. And ultimately, when people couldn't pay, he was like, well, that's fine. We'll wash your loan off. You just have to give me your land. So he became the largest landowner in that county by having control.
Yeah, that's a heck of a deal. He wipes off the loan, and he owns the land.
Right. I mean, what a fabulous deal for him, right? And they all went to him because he's the one that had access to capital, right? He's the one that understood how money worked. And he ended up, through the Depression and through the bad farming times of the 70s and the 80s, all the times that farming was bad, he picked up, or his family picked up, because it wasn't him, he had passed away by then. They had picked up huge tracts of land. And now they should change this name of this, at least the county, because the largest landowner, single landowner in that county, is the family that owns the bank. So you talk about banking, somebody knew you and could trade on your reputation. They're more than happy to lend money because, again, if the banker understood what was going on, how does he lose? He either gets the land, which most banks don't want anymore because they don't want to manage land, but this guy did because he understood the value of land, or he makes a tremendous amount of cash flow off of your hard work. Yeah. He never loses.
Yeah.
So if we can put that in our brain and say, okay, let's take that same thought process and apply it to ourselves. Why wouldn't we want to be that lender? First to ourselves, take care of ourselves, our family, and now let's take it to somewhere else. Because in that last couple sentences in that last chapter, Nelson talks about you will need to lend money to stay in business. Yeah. We'll take care of ourselves, we'll take care of our family, but you need to start lending money to take business. And you have to bring in outside sources. But you don't do that immediately. You have to understand that this is a process that takes time and commitment to have happen. And once it happens, and once it starts really to blossom and develop, and you're starting to see that now in your life too, Nicole. Mm-hmm. People are starting to deals are starting to find you, people wanting financing, because they don't understand how money works. Now you become that lender. And now once you start taking control, you're going to start seeing a huge, really, I told somebody they were looking for some passive income. I said, if you understand banking, that can be your first step in this passive income stream that you're looking for. Because all you have to do is lend money, write a couple documents, and you're done. It's very passive.
Yeah. I think that's one of the things about infinite banking that attracted me so strongly was there are people out there. I was one of those people, still am one of those people, who always wanted to have my own business of some sort. I wanted to do my own thing, but I didn't really know how to do it. And this gives people because as you dig into this and you begin to understand and wrap your brain around the possibilities, it opens up an entrepreneurial sort of mindset of what is possible, what is out there, what can I do, instead of just thinking inside this little bitty box of, I'm going to be an employee, I'm going to put my money in the bank, and I'm going to, retire at 67 and live on my Social Security and whatever savings I've had.
Right.
It just opens up so much more.
Yeah. It goes back to that change of perspective. Mm-hmm. I told you a story about when I was a little kid riding my bike and discovering that Wimbledon, North Dakota wasn't the same as Wimbledon, England. Again, once you change your perspective, you're never going to unlearn that. Yeah. You're never going to put that genie back in the bottle. Because now that entrepreneurial spirit now is running rampant in you, right? You're like, oh, where can I find a place to put my money at work? And it just becomes, it's almost, contagious inside you. Once you open that bottle up and that genie starts to get out, it's a tremendous thing. And that's why, again, it goes back to becoming your own banker is you becoming your banker. It's not Nicole or Wade being the gatekeeper to all that information. We're here to empower you to take control of your own financing function. I don't want to do it for you. You don't want me to do it for you. You got to take control of it. And it's the infinite banking, right? Infinite. The idea is the thought process are infinite, what you can do once you get and understand this process. Yeah. Once you build up your pool of capital, then it becomes infinite.
Yeah. And that's not to say that we aren't there to help along the way.
No, exact opposite. We're here to empower you. We're here to empower you. And part of the empowerment is teaching and having discussions, like the discussion I was having with my landscaping guy. This guy it was interesting. He was depressed. He was basically thinking he was a failure because he had this nice streak in him. He was failing, but he wasn't a failure. Mm-hmm. And once he understood that, and once he went back and renegotiated, talked to his family about what was happening, they're like, oh yeah, I was willing to pay Sam's landscaping service to do it at X. Why wouldn't I pay you that? Yeah. But he was offering them a deal, and they were taking it because they didn't know any better. So once they had that understanding, they was like, we'll pay you 10% more what we're willing to pay somebody else. And then his business took off. And so again, our job is to empower you to be your Sherpa along the way to help you up and down the mountains. But you still have to do the walking. You still have to do the journey yourself as well.
Yeah, it's good. Really good.
Thank you so much. That was fun. I enjoy having these conversations about Nelson's book, and I love your perspective. Although I probably don't get to let you talk as much as as I like to talk. But I get pretty worked up and I get pretty ramped up when I start going through this. And hopefully this information will help you, the listeners out there, really just to sit down and read Nelson's book, engage with an IBC practitioner. If it's not me, if it's not Nicole, but find somebody that's a practitioner. I talked to David Stern at the Nelson Nash Institute on a podcast here the other day, and we're having the same discussion. Is like, if it's not me, make sure it's somebody that is certified to do this, because that is a person that's willing to step out and be counted as one that says, I understand what's going on. I've studied what Nelson was saying, and we have the ability to help people become free of the bondage of being indebted to somebody else. You're not having the debt. You're still having debt, but it's one that you own and control. And so, again, those that control the financing always win. So why not be in that seat?
Yeah. And I just want to add on to this. You've mentioned this properly structured life insurance policy and then finding a practitioner. And to find somebody who understands this, because as somebody that came from a traditional life insurance world, structuring these much different. And in a traditional world, you're not going to see the same efficiencies and leverage in the policies that you see with a practitioner who is doing this properly. Look at your situation and talk to you about your opportunities, not what everybody else is doing.
And I think establishing the policy, that's the first step. And quite frankly, that's the easy step. Where the real value comes in is like talking about these different strategies. How do we think about money? How do we set up a separate account to run our banking system? But these are all things that, again, nobody's going to learn immediately by listening to one podcast. It is a lifelong study. I'm committed to that lifelong study. Nicole, you're committed to that lifelong. So we're constantly rethinking our thinking, as Nelson says, and then putting it into practice with ourselves or with our clients. And so somebody can say, oh, I can sell you a policy that fits it. I'm like, yeah, you provided the product, but you haven't provided the craftsman's knowledge on how to use it. Yeah. That's the real key to working with a practitioner. If you don't want to work with me, that's fine. I'm a very abundance mindset type of individual. But make sure you work with somebody that's at least certified. Yeah. Because that's going to be the big key, is that we're making that lifelong commitment to teaching you the process along the way, because it isn't just about a product. It is about a mindset, and we all need coaching to bring our mindset back into focus.
Yeah. And to that point, there are lots of practitioners out there and somebody that you're comfortable with, because you want. Right. If you're working with somebody that you don't particularly care for, it's not going to be a lot of fun. There's lots of practitioners, and you can find one out there that fits.
Right. Hopefully, we're reaching the people that are our people. Yeah. And I'm pretty confident of that. But if this gets sent on to somebody else and we're not able to hook up again, we work with people all over the country. So it's not a regional thing. It's really, you go into Sagewell Strategy, you can contact me in whatever state you're in. We're licensed to work in that state, and we can work with you. Nicole's the same way. It's a process that she can work with doing Zoom calls, and we've all learned how to do that the last couple of years, how to go online and do those type of meetings. So it doesn't have to be a regional thing. Don't get that, again, think bigger. Get outside that box and think bigger, that I can work with people all over this world. Don't have to be constrained regionally to do it.
Good.
Anything else, Nicole?
No, thank you. This was fun.
Yeah, it's been real enjoyable. I enjoy these sessions. I look forward to getting into the rest of Nelson's book in our next couple of podcasts. So please join us as we complete these podcasts, put them together, record them, share with anybody else. Because remember, the bigger the community we can build with you and anybody else that's doing this, and anybody in your circles, will help grow this community and this thought process, so we have other people to run these ideas by. So as we go through that process, just share this idea, share this podcast to help explain this to those people in your lives. Thank you. Yeah, thank you, Nicole, for joining me. If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches, and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.